We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to another special episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm talking kind of fast because I want to get every single word that this man right here has to tell us. This is episode 2 of Matt Faircloth with DeRosa Group, and we are going to dive into the last time we dove into female entrepreneurship. We talked, we bantered about politics and so on. This time we're going to talk about raising capital. We're going to talk about real estate investing, and we're going to get down to the nitty gritty of what this guy does, because I'm going to tell you, if you're looking for a top man in the business, this is your guy. He has deals. We're ready to go. So anyway, Matt, how are you?
My man, I'm great. And it was funny is I enjoyed that episode so much with you. Afterwards, you and I debriefed, very briefly because I had to go. But I was like, hey, man, that was one of the best podcasts I've done in a long time. But what's funny is we never talked about real estate,
That's right.
But I really just enjoy talking to you. And I enjoy getting real with you and talking about real stuff, about the real world. And I appreciate you. And so I was glad to come back and do a part 2, Faircloth Returns, or whatever you want to call it, So thanks for having this show, and thanks for having me back on again.
Absolutely.
Because I really enjoyed the last conversation. I'm sure this next one will go well too.
Yeah, and it's just such a the thing is that we all forget. We want to come on here and let's be quite truthful. If we talk and we talk about capital raising and we talk about real estate deals, okay, there's only so many really good, nice talking points that you can do about those things. And the other part of this is saying, hey, these people that are investing, these people that are finding deals, these people that are buying deals, we're all real people. We're all victims of political agendas. We're all people who try to work around in this world, and the business world is not just relegated to one thing. So in my
Yeah.
opinion, there's a lot of moving factors, especially politically, especially geographically. There's a lot of things going on. So anyway, but the first thing I'd like to kind of dive into here just a little bit. Now, you and I have talked extensively off air about raising capital. Now, I know there's a lot of, say, beginner capital raisers out there that listen to my show because they want to hear people who have been there, people who have done it, and the likes. So I guess let's go first with, and we were talking about the DeRosa Group website earlier, and I was kind of giving you some,
Yeah.
pulled it up on, I'm talking a lot, but we're going to get to where I'm going here.
Blew my mind, man. When you
The
you give me some
SEMrush,
stats on the
the
website.
SEMrush diagnosis of the website, which is something you weren't even paying attention to, or knew that we could look at or whatever, is the traffic that's coming to that, and then the fruit that's coming off of that traffic. But I want to know how. And you said, okay, well, that website's been up for a long time, right? How did you get started? What did you do that raised like your first deal?
It's funny, man, because it's not like my wife and I, people think that like I'm just gonna sit down and I'm gonna write down all these goals. And I do that. I write down goals and they help guide me and whatnot. But sometimes when you achieve success, you look back and you're like, sometimes you do write down exactly what you want and then it shows up. And that happens a lot in my life. But sometimes you end up doing something and it's like, man, that's funny. I didn't even intend for it to happen that way. So what happened is that my wife and I had built a reasonable portfolio with immediate family's money and with our money.
Okay.
And we built like a 30-unit portfolio, right? Respectful. And we had refinanced it a few times and pulled cash out and taken that cash out and bought some more real estate, and we were doing okay. And then my wife, and yet again, I think we said on the last show, marry up, gentlemen. And so my wife married up. I married up. No, she didn't marry up. I married up. My wife went to Wharton, went to UPenn for grad school, and went to the Wharton School of Business there. To take some classes, which is like the premier, place to go for business education. And one of her colleagues, classmates from Wharton, She's getting reconnected to, had like a reconnection call on LinkedIn, looking for referrals or whatever. And she got into talking about what she was up to, what he was up to. And she, my husband's running this real estate company. And he stops her, real estate. Tell me more about that. And then she tells her this is what he's doing, whatever. And he says the magic words, Casey, which are, man, I sure wish I could do that too, but I just don't have the time. Right. Because he had graduated from Wharton and then went and became a stockbroker in New York City.
Yeah.
And was working 80 hours a week, making high six figures, crushing it with a hammer, making great money in his late 20s.
Yep.
God bless him. Right. But just had no time to enjoy his money, had no time to do things with his money outside to get into bed and go to work again, because you're a Wall Street trader or financial planner on Wall Street. It takes a while. It takes a minute to get that book belt, and the money's so good, but you got to hustle to keep it going. Right.
Right.
So he was some ways golden handcuffed. Right. So I went up there and had coffee with him. And he was like, so if I give you $50,000, what kind of a return can I get on it? Like, we're just like within the first 10 minutes of conversation, Casey. He's like, so if I were to loan you 50K, if I do this, and he kept saying 50K, 50K, and I'm like, well, I guess this guy wants to give me 50K, right?
Yep.
So, and I want to let him do it,
Yep.
and I will go forth and find something. So I said, here's the deal. I don't have anything right now. Because I didn't, I thought this was just going to be having coffee with a colleague of Liz's that maybe wanted to hear more about maybe buying rental properties himself or whatever. We didn't really know what he wanted to talk about because we had never offered equity to anybody,
Yep.
right? So I said, here's the deal. I get you want to put money to work. I will go find something. And this is 2011. And so this is right after the bottom had fallen out and the world was just putting itself back together real estate wise. So I called a wholesaler buddy of mine and I'm like, what do you got? I know you got something. I got about 50K I need to put to work. What do you got? And he was like, I got something. I got these 2 little townhomes, workforce housing, 2-bedroom, 1-baths. Owner owed $95,000 a piece on them, but we can short sale them to you, meaning the bank will take a discount and my fee and all that, and I can sell them to you for 25 grand a piece.
Okay.
Right? Because Deutsche Bank, or I think that's who the lender was willing to take that big of a haircut back then. To just get me out of these deals.
Yep.
So we bought them both for 50K. I borrowed 50K from another buddy of mine. They came in and lent us money out of his self-directed IRA. First time I'd done that too.
Well, and that's I think the part where a lot of people get screwed up because they don't really realize that that's available.
Yeah.
You know what I'm saying? I mean,
well, that happened. That went down another way. That went down because I had another buddy of mine that was buying these houses around Trenton, which that was our playground, Trenton, New Jersey. He's buying these properties around Trenton, and he would buy them, fix them up, and then refinance them to a bank. And then he'd have me help him find him a tenant because back then I would do some leasing and stuff like that, right?
Yep.
So I'd find him a tenant, and I'm like, man, I know you do all right, but how are you paying for these? And he's like, oh, I borrow money off a guy I work with, IRA, and he's a real estate investor, and he showed me how to do it, right? And he can't put his IRA into his deals. So he was like, why don't you let me put my IRA into your deals? And so this guy taught my buddy how to do it. My buddy was like, listen, this is amazing, but guess what? I can't put my IRA into anybody's deals, and I got 50K sitting in my IRA, and I need to put it to work somewhere, so why don't you let me show you how to do it? And I said, that sounds great. Okay. So he gave me his loan docs, gave me his instructions, his this, is that, is this. So I borrowed 50K from my buddy who told me, hey, this is how we do this, and this is how I borrow money. And then 50K from the colleague of my wife's in equity. He came in on equity.
Okay.
The other guy came in as a loan. So on the equity side, we just formed an LLC, and that LLC bought these properties, and we did 50-50 split. I was the legs, he was the money. I did all the running around and browbeating contractors into submission and, did all the reno work and all that kind of stuff. Put 2 tenants in each, again, bought them for 25, put 25 into each of them. So I'm into them for 50K all in, right? Brought a tenant in each one of them paying $950 a month. And this is back when the things were great and you could do the 2% rule all day long, and so we refinanced them, pulled all my equity guys' money back out, gave my private lender IRA guy his money back. Now, and they both want to give me more money because they're both like, oh man, that was amazing. Let's do that again.
Okay.
So before you know it, my Manhattan guy, stockbroker dude, is going, over Chardonnay, telling all his buddies about how he's got this local crappy Trenton dude that's buying properties in Trenton,
Yep.
and on the other hand, I got the IRA guy that's like, man, that was amazing. My IRA just sitting here. What are you doing? You're killing me. You put my IRA to work.
Yep.
So I'm like, all right, let's go. So then before you know it, we're buying duplexes and whatever. And with those three guys, that lender guy, just his IRAs, and my New York guy and his buddies, between the three of us, we bought something like 45 doors, right,
Wow.
in Trenton over like a 4-year period, and scaled up and did bigger and bigger multifamily. Did the Burj. I bought like a string of 4 families and refinanced all those. Took the capital from those and bought a 10 unit. And so that was my seed capital. And they kept telling more and more of their buddies about it, and I kept refining the magic, tightening it up, talking to lawyers about how to structure these things. And we started small, Casey, and then we were off to the races from there.
Man. So I mean, all right. So I want to. There's a lot there that you brought up, and one of the
Mm-hmm.
main things that I think beginning capital raisers, one of the main issues, at least I know it was one of my issues, was trying to figure out how to educate people on the fact that they can use their IRAs to
Yeah.
invest in these deals. And that's, to me, the person that figures out how to get that education across, like how to just
Yeah.
get somebody to understand that. Because a lot of people, and I think and to a degree, now kudos to the financial industry for like basically strapping people in and saying, hold on, we're going to take care of it. We're your boom.
And making people believe that
Correct.
they are the only source of wealth building
Correct.
in America. That if you are middle class, or even in the upper class, that that a financial planner in Wall Street is the only resource you have to build your financial wealth, and everything else is sketchy. Everything else is high risk.
Correct. And
It's
that's
the biggest bracket going,
what's
Casey.
always enamored me about the whole deal is like you can go basically to the street corner up here and you can buy stock in any company you want to buy stock in, right? You just you sign up for an account online and hey, you're trading in a day, right? But when we're doing our deals, we have to disclose, high risk, high risk, high risk, high risk, high risk, high risk. When in fact, you always have the dirt. Okay,
Yeah.
that's like a saying that I made years ago. You always have the dirt. Hey, if you
Yeah.
don't have a single board, you have the dirt. And I'm
Yeah.
referring to so we're having to basically like our sign guy. We have to hold up a sign that says you can invest your IRA in real estate.
Yeah.
And now granted, when you step up
You
to
know how many
the
times, Casey, people have said to me, "Hey, is that legal?" Because
yeah,
I tell them like, "Hey, you can put your retirement account." Oh my, man, I'll tell you straight up, Casey. I've had financial planners tell their clients that what I told them that hey, listen, you put your IRA into real estate. Number one, that it's SEC regulated. That's BS, not true. And number two, that it's illegal.
yep,
Or that, and they like to scare them with UBIT. Oh, you're gonna pay UBIT. You're gonna pay
yep.
UDFI,
Yep.
right?
And I always, yeah, that, well, I use the
It's all
term,
scare
this is
tactics.
the taxes will just eat it up. The taxes will just eat it up. There's no sense in it.
Mm-hmm.
And if they don't get, because if the scare tactics don't work, then the taxes tactic has to work because who wants to pay
Yeah.
the government taxes? And so what we're looking for, or how I'm trying to sprout my seed, if you will, is to just educate. Just say, hey guys, listen, this is something you can do. You can do this. And
But you can.
leave it at that. And it's unreal.
Yeah.
So what we
Well, I with to bottom line it, to those listening that are trying to raise capital, don't forget to ask those that call you, that tell you that they're interested in investing in real estate because they see they see the awareness campaigns that you're doing,
Mhm.
right? When you get them on the phone, don't forget to ask them what's in your retirement account, because I've had people be like, "Oh man, I've only got like 20 grand that I can put to work in real estate. The other stuff I need to have is reserves, and just in case I lost my job or whatever." And you start asking questions. Well, What's your home worth? Oh, my home, oh, my home's gone up a lot in value. It's probably worth 600,000. Well, how much is the mortgage? I'm proud to say that my wife and I worked really hard and we paid it off.
Yep.
So I own my home free and clear, right? 30% of America, by the way, Casey, owns their home free and clear. Did you know that? 30%,
And that's
right?
hard. And that's so, and and when I first started in
Nobody, it's like a badge of honor. People brag about it,
yeah, when I
you
first
know?
started in the real estate business, I was like, I'll never forget it. This guy called me, right? And he said he was here from, he was moving here from Utah, right? They had a house under contract in Utah. I never had ever even heard the guy's name. And I'm like 2 months into my real estate career. And I answer the phone and he says, I'm going to just say his first name. My name is Bruce, because he's a real individual. And I hope, if God help me, I hope he hears this. But he called me and he said, listen,
Talking to you, Bruce.
yeah, tell me what you need. And he said, this is his exact words. He said, I am leaving town. This is a Friday afternoon. Okay. And he says, I am leaving town Sunday morning at 10 o'clock. I am going to buy a house before I leave. First thing, you stop and you say, all right, okay, cool. No problem. We can go look at 100 of them. And then we put a contract on it, right? But no, then he goes one line further. He says, and I'm going to pay cash for it.
Oh boy.
I'm going to buy a house by Sunday morning at 10 o'clock when I leave, and I'm going to pay cash for it. Now, obviously, he wasn't meaning close by then. He just meant, hey, this is a legitimate deal. I'm going to pay cash. I'm going to live here. Make it happen. Well, anyway, that was my first introduction to the fact that people do actually have cash and people do actually own houses free and clear. Like, I was raised under the well, it doesn't matter what you do. You go get a mortgage and you pay your mortgage and you live in the house and you go to work and you pay the mortgage and that's it.
Yeah.
And then, but it just, man, it was really, so I know that's kind of off the cuff, but or like out of our what we're chatting about, capital raising. But I mean, it's just such a story. But he ended up buying a house. And he
But
closed.
it's not though. It's not, because the capital raising is all about understanding what matters and what the resources are for those that you are speaking to and what matters to them, right? Either it's those two things, and so it matters to them that my money's protected, that it's safe, and that I get some upside on it, and that it's not going to get stolen. I've worked very hard for it, and
Yeah.
also what they have to put to work, right? I've had people like, I only got 20K to put in your deal. Well, what do you have in your retirement account? I mean, what am I, my 401k? Like, no, not your 401k. You used to work. I bet you used to work at one job and now you work at a different job, don't you?
Yep.
Oh yeah, I've got a Fidelity account, from my past job. I still have that. Like, what's in there? Oh, I think it has like $250,000 in it. And I'm like, what? Okay, let me show you what I can do with that. Or what I can do with part of that. What I can let me educate you
Yep.
on what's possible. Because the
And,
bottom line, Casey, is 4% of IRA accounts, not 401ks. 4% of IRAs are invested in anything outside of Wall Street.
yeah.
Like 96% Wall Street, 4% any alternative.
And
That
I'm
includes oil
not,
and gas
and I'm
or
not,
gold, real
I've
estate.
never like voiced that I think, hey, you should just take all of your IRA and put it in real estate. I'm not that guy. I mean, I am
Yeah.
saying, hey, listen, you've got, say, 50% of your money that's invested in a CEO somewhere that you're hoping runs the company well,
Yeah.
and 50% in an asset. Hey, if all else fails, everything in this entire world falls apart, the whole world is going to hell in a handbasket, you still own the dirt.
Yeah.
And I'm
And
just like,
you're not going to go take, right. You're not going to go take that CEO's house if he doesn't pay you.
yeah,
He's not going to give you a personal guarantee. He's not going to call you with every other week updates or email you bullet points on how your money's doing.
no, you're
We
going to
do
get a
all that.
quarterly 48,000 page document.
That you can't read anyway, and he's certainly not going to return your phone calls.
And
We'll return. Me and Casey return your phone calls, and if it's a collateralized deal, you got a piece of dirt, as you said, you can go after when if you don't get paid. So I don't get the reliance upon only Wall Street. Don't get me wrong, Casey. I'm not a anti Wall Street guy.
well, that's what
I
I'm saying. I'm not
am.
either. I'm just
Yeah,
saying,
that's not the only way.
if you want something Because when you sign up for those IRAs and whatever, like if you go to work somewhere and they're like, okay, what do you want to do with your money, your retirement money that we match, whatever, right? Well, then you fill it out and you're like, okay, I want to put 30% in this, 30% in this, and 40% in that, right? You just pick them. It's like an eeny, meeny, miny, mo almost, because you're like, and basically the financial advisor is saying, okay, this is high risk, this is medium risk, this is low risk. And then you pick based on that. And then like, you've never heard of this crap. You're just like, hey, he telling me to do it, so I'm going to do it. And there you go. I mean, it's the same thing, except you can have
Hmm.
a hard asset and a guy you can call, or at least get on a quarterly webinar or quarterly web discussion that says,
Hmm.
"Hey, our asset, we've had X. This is the number of vacancy, or whatever." And so, anyway, man, it's just that's the part I hope I want that. I know you said you had a good, solid episode here, and I don't want to detract from other things you want to cover, but I just know that
No, I'm good to
first
go.
deal is so important that once you can gather that, get the deal going, and have at least that one piece on your track record. But again, and there's something to be said because the accredited investor is likely, I'm going to say 30% of people that are actually accredited investors know what they can do with their IRAs. And I'm going to say there's probably 70% who are just like,
Hmm.
put it in there and let it
Yeah.
grow. Put it in there and let it grow. And then instead of, you start looking at these 15 or 20% returns, or not, over the period before the exit. But anyway, all right. So next point. What?
Well, I'll throw one more thing out there. Anybody with an IRA that calls you, you tell them like, listen, I can pay you a rate of return on your money, and unlike cash, unlike other kinds of investment vehicles, right? You don't have to pay tax on what I give you. That you can take what I give you and parlay it back in and recycle it.
Yep.
Which allows you to compound the interest. So if you give me 100 grand and I pay you an 8% rate of return on it in a year, and then I give you your money back, right? Let's say it's in a private loan at 8% interest. So I give you 108 grand. You can then take that 108 grand with no ramifications, no repercussions, no taxes. Take that 100 grand, all of it, and put it into my next deal.
Yep.
And what happens is, Casey, is they give you 100 grand, you give them back 108. Then they give you 108, you give them back 119. Then they give you 119, you give them back 135. And
Yeah. And
before
if
you
you
know
do
it,
that, and then when you divide that back, say over 3 years, that's a 10%
they
return. I mean,
they
it's
can
just,
double up really fast
yeah.
is what it is. Like that's my point is they can double their investment with you and double that 100 grand, turn into 200 or 400 or 800 really, really fast.
Yep. And
So,
that's what I think. And let's be honest, it's like when somebody comes to me with this newfangled thing, right? And I'm always willing to give like 5 minutes to just say, okay, hey, what the hell is this thing, right? And then after that first 5 minutes, then I determine if I'm going to give another 15 minutes. And this is just an example. And then
yeah.
after that 15 minutes, I'm like, okay, do I want to dedicate, say, an hour a day for the next 20 days in trying to just learn how to use this object? And I think that's a lot the same type of scenario with a lot of people. They're like, man, I just don't want to have to learn that. I mean, I know that. I think that's probably the biggest objective when you're trying to tell somebody what they can and can't do with their IRA money. And
Hmm.
it's that. So anyway, I think that's just a huge hurdle that people have to want to learn, or just, and then even at that, you go down one more level. They're like, man, there's another person that I have to determine whether I can trust or not.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
I know I trust this
Yeah.
guy. I know I trust the guy over here at my financial advisor's office. I know I trust him, so I don't have to work with that. I've got to learn whether I can trust
Yeah.
me, you, or whoever. And the trust is
Unfortunately, the financial guy, because he's not making a commission, is not going to be too friendly about giving his client the right kind of advice of like, yeah, you really ought to diversify. And owning Google and Microsoft stock is not diversification.
no,
You
yeah,
know,
yeah,
yeah, and or owning anything traded on the same platform is not diversification.
correct.
If all your money is traded in one location, Wall Street, right, then you're not diversified.
Yep.
You know, because things that are traded in one place tend to all behave together.
Yep.
You know, even if you look at like Bitcoin and stocks, they tend to trend around the same. When the stock market goes up, Bitcoin tends to go up. The stock market goes down, Bitcoin's begun to perform along with the Dow Jones Industrial Average. My real estate doesn't follow exactly in line with that because it's not traded in the same manner, not traded on the same platform that stocks are.
Well, and the fact of the matter is underneath every asset, however many doors you've got that many beating hearts inside, basically.
Yeah.
And so, anytime there's a human element, and a human element for the most part on like a 70%, 30%, 70 to 30 ratio can be basically predetermined. And then you have those outliers of that 30% who shit just gets wild and
Yeah.
you know what I'm saying? So you
Yeah,
can,
I do.
so when you start breaking that down and you start looking at, okay, how much of the human element is going to matter in my return? And again, I'm like you, and the other beauty about it is like if you go buy, like I don't want to give any type of idea that a big company is going to go broke or anything like that, because I don't know, but I'm just saying the fact of the matter is that stock technically could go to zero, right? Goes to zero. That, and if the stock goes to zero, most likely the company's assets have been sold off to try to satisfy the debtors who are in the capital stack above you as a stockholder,
Mhm.
right?
Yeah.
And then you're left with a goose egg, right? And again, and I come back to like real estate. And then if you look at real estate on a trend, I mean, it's like you and I were talking the other day. Name any particular property that you wouldn't just immediately snap up, pretty much sight unseen, if somebody said, "Hey, I'll sell this to you today only, for exactly what it was worth in 2006, the peak of the market." I mean, and you're looking at, and it's like,
Yeah.
okay, so then do that on back through time. I'll sell you, Matt. I will sell you 123 Main Street today, sight unseen. You can't go look at it, for exactly what it was worth in 1982. For exactly what it was worth. We'll have an appraisal done. We'll have a forensic appraisal done, and whatever it's worth in 1982, I will sell it to you for that price. But you can't go
There's
look
only a
at it.
few addresses I can think of that you
You
lose
just
on that.
whatever it was,
Yeah.
as long as the damn structure is still there.
Yeah.
I just
Right.
so
No, I mean, I can't think of. It's hard to think of an address that conversation wouldn't work.
and that's
You know?
what I'm getting at. Now, you obviously between '06 and today had a trough. I mean, you had a fall off where things weren't, but the fact of the matter is if you build your holding power and you create a company idea that, hey, we're not going to ever be backed into a corner where we have to sell. We always have the option to extend if we need to, because we're still getting cash flow, right? Right there it says it. We're still getting cash flow. Go ahead.
No, I think that invest all I only invest for dividends, right? Which is different than appreciation. And I think those that are investing in stocks in general, too many people, and the stock market's everything spoiled people the last 10 years.
Oh
That
yeah.
if I put a stock, I put $1 into stocks, or $1 into real estate, or $1 into whatever, or $1 into the real estate I bought in 1982, the most money I'm going to make is when it goes up in value. But I really feel like, first of all, the wealthy don't think that way. The wealthy are thinking of cash flow. You look at Warren Buffett, he's thinking of businesses that produce cash
That's
that
right.
just are going to, right. And then that's how the man's worth $97 billion,
Yep.
right? Not for nothing.
Yep.
He's 92 years old.
I knew he was old.
I just heard that, like, wow.
Yeah, and it's unreal.
Yeah. Anyway, God bless. But the way that you get to that level is by not, betting on appreciation, because then you just go into the roulette wheel.
Well,
And the last 10 years, everybody's won betting on appreciation.
and
But
you mentioned Warren Buffett there, and it's worth mentioning that basically he has built Berkshire Hathaway is nothing more than exactly what we're doing. He just is putting into other companies, and we're putting
yes.
into real estate.
Yeah.
and he's hoping
He's a syndicator.
he
syndicator.
invests in operators though. That's always been his managers and operators.
He invests in industries and operators.
That's right.
You know, he saw mobile homes and like the need for housing in this country a long time ago, which is when he bought Clayton Homes.
Yep.
Right. And it's just the guy's made the right moves. He's buying gold mines right now.
Yep.
You know, because he sees gold and the need and the desire for America to go back to holding precious metals, and like not because the shit's about to hit the fan or because the bottom's about to fall out or because you and I are about to go move back into caves and because the dollar goes away, but because gold it's also becoming more and more of a used resource.
That's right.
And it's being used more and more in things like our watches and our other devices or whatever. So he just sees our world needing more of it.
Yep.
And that's he's one of the best sages out there in seeing where the hockey puck is going.
Well, and then he was able to get in front of that puck when he bought the railroad company.
Yes.
Bought the railroad company. He very, very plainly said in an interview that he was doing that so he could see the movement of hard goods, of resource goods, like heating.
And that tells him where the money's going.
Yep.
Oh, geez, but there's a lot more food being bought in the Carolinas.
Yep.
Must be a lot more people moving there.
Yep.
But the parallels, right? As a real estate investor, I focus on cash flow.
Yep.
Right. And I've always done that. And I've always gotten lucky with appreciation. That's put money in my pocket and it's maybe helped me sell. But I make my living off of cash flow.
Yeah, you have to, because that's the only thing that's a guaranteed portion of it is that, if you have 100 doors, what are the chances that everybody's going to pack up and move out in one day? Not very
Zero.
Good. What's the chances that you're going to lose 10% one month? Maybe, depending on what you've got.
Pretty good. Depending on if COVID comes through, whatever. 10%
and so,
very likely.
But yes,
going to zero it's not even worth talking about.
Yeah, you're buying for the cash flow period, and then the appreciation is always second. The appreciation is kind of the icing on top. So let's move forward in your timeline a little bit. We're getting up to our 30 minutes and so on. We will move. I want to move on to, like, say, after you had that first deal and you were like, hey, we're going into this deal, we're going into this business, or we're going to start growing this business. What year was this, for one?
That started in 2011 and it scaled out, and then we really, really scaled up big time in 2014.
Okay.
And got into bigger multi. That's 15 is when we bought an 18 unit. 16 is when I bought a 49 unit, right? And so we had taken that concept of, aggregating small groups of investors and buying small to mid-sized projects, and it was really more and more multifamily.
Yep.
And we just kind of like it started to make more logical sense to gravitate towards bigger and bigger multifamily deals.
Sure.
I'm one of the few syndicators you can talk to that didn't just take some knucklehead's guru weekend and decided to apply the philosophies taught to them by a run to the back of the room guru. I learned it hands-on firsthand and just started to apply it as we grew.
Sure.
Meaning like how to do syndications, how to how to create the legal forms to make it happen, and learned it from the bottom up.
Well, and that's what I am in the mastermind, and my guy's definitely not a guru. He's highly intelligent, Hunter Thompson, and he very explicitly says these are the same moves that billionaires make. We're just making them on a little bit smaller scale, where we're buying portions of, because if you think about it, like for instance, where we heard Shaq speak a couple weeks ago, right? He's like, I want partners. I don't want to have to know how to go change that light bulb. I don't want to know how to go have to clean up that carpet because we had a leak in pipe.
It was all about JV.
Yes, JV is it, joint ventures. And it's again, without these syndications, joint ventures, they could probably be aggregated down to be about the same thing. And that's exactly this. And that's exactly what these the ultra rich do. They're like, man, I don't want to have to go fix that if something's wrong. I want to do this.
And that's because the ultra rich and the wealthy, Robert Kiyosaki, Shaq, all of them, understand the value of time.
That's
It
right.
is the one limited resource we have in the world. You got all the money you need, all the deals you need, all the people you need to help you get where you want to go. The one thing you only got but so much of, and you will not get any more of it, is time.
Yep.
You
And
know,
everybody's trying to
and
buy that
the really
down.
rich understand that.
Yep.
What?
And everybody's trying to buy that down a little bit at a time. And that's what we do.
Which
So,
is also about optimizing time, or you're investing for other people's time or other
yep.
people's resources, other people's know-how, you know, which is why the wealthy folks that I know love syndications, because they're going to leverage my time.
That's right.
I am the one that's out working for them. I am the one that's out finding the opportunities and leveraging cash flow out of the assets that we're getting and building up the business plans and everything like that. I'm the one doing the doing for
Yep.
them.
Yep. I'm with you, man. And that's, and it's a service that, I wish that more of the financial planning world was open to the concept, or even, and again, maybe they're the same way. Maybe they're like, I just don't want to even have to learn that. I'm doing well trading
I
these.
get, I hate to be like that. Most of them, Casey, are not pointing folks our way because they don't get compensated.
Well,
Because
but
there's no
but
way
they
to.
could get compensated, right? If they're licensed, could they not get compensated?
No,
Obviously.
not because it's not what we sell is not a Finner product.
Mhm.
Maybe if you're working with folks like Hunter has a broker dealer's license, right? So if you're working underneath someone or selling equity underneath someone that has a broker dealer's license, then there is a backdoor way that a financial planner, especially if they are a registered investment advisor, an RIA, if they're that, then they can get paid, but then their broker dealer has to be okay co-broking the equity, and there's a lot of if this then that's right.
Yeah, I mean, there's a lot of pieces that
Yeah,
have to
but it's
align
not
to
a
make
wide
that
thing. Yeah,
cool. All right, man.
there's
Well,
a lot of
listen, I want to get to our couple of questions that we ask every guest that comes on here, and I know
no problem.
that I really, really, really want for this conversation to extend even further. Hopefully, in another episode, not too far down the road, just because I feel like there's so much you can teach people and again provide value. But the first question is, what is the best book that you have either recently read or are currently reading?
I'm currently reading, let's see, High Performance Habits, and
Okay.
I'm also reading Who Not How. And they're both great books. Oh, I'm listening to the No BS Guide to Marketing by Dan Kennedy.
Yeah, that Dan Kennedy is brilliant,
It's my first
especially
Dan Kennedy book, man. I'm
really.
digging it.
I've
Yeah,
actually, honestly, I've only listened to Dan Kennedy a time or two, like via
yeah.
some other like
It's
when
okay.
he's on.
His books are very they're not like super meaty granular. It's a good like listen to when you're on the treadmill kind of
Sure,
thing.
sure,
So
cool,
yes, I'm into my first Dan Kennedy book and I'm really enjoying it.
awesome. What is a dream vacation that you have either taken or hope to take?
Um, let's see, taking my whole family to Italy. It's really taking the time to do it. My
Yep.
kids are young-ish, but in a year I don't think they will be. So
Yeah.
I think they'll be old enough to do it.
My
So go
wife and
to
I,
Italy for
uh,
a long time with my kids.
we went to Italy about 2 months ago and spent, and I thought it was funny because I thought I could drive. I thought driving over there would be like driving over here. Man, I was so wrong. Um,
Really,
I
you
was
couldn't.
so,
It's not a good idea to drive in Italy, huh?
man, dude, like there's one ways, but there's no signs or anything, and like if you meet somebody on a one way, like you don't go around. You have to back all the way back out the street because everything's so old. They were built for horses and carriages. They weren't built for cars. So anyway,
Yeah,
all right. What is
interesting.
the best way for the listeners to reach out, Matt? Because I know there's going to be several people that have questions, and I know that with your connections to Bigger Pockets, we don't want to get like, hey, here's my phone number. But if somebody heard something they want to further their education about, or maybe shoot you an email or something like that, what's the best way for somebody to get in touch with you?
Oh, they can email me. Not email me. I'm sorry. Just go to my website, and there's an email address on there. They can reach out to me at DeRosaGroup.com. That's DEROSA Group GROUP.com. DeRosaGroup.com, and they can go there and they can contact us. They can join some of our online free masterminds called DeRosa Insiders on Facebook. Just look up DeRosa Insiders. But all that's there at our website, DeRosaGroup.com.
Awesome. Well, Matt, thank you so much. And I think Liz is going to be on our podcast. I want to say it's in a week or maybe 2 weeks, but we're certainly looking forward to that. I mean, the education that you all bring and the paying it forward kind of things that you all do is definitely something we all need to learn from.
Yeah, man.
And Liz is of course one of the folks that I've watched from afar, just in learning. And anybody that has pointers on how to raise daughters, me and Matt are both open. So
listen to our last episode if you haven't listened to
send us, send us
do.
feedback, because it's one thing to teach somebody business, but it's another thing to put up with the attitude at the house. So anyway, but listen, listeners, if you don't mind to
whole
head
nother
down,
conversation.
what's that?
That's a whole nother conversation.
That's right. That's another episode. Listeners, if you don't mind, head down to the subscribe button. Click subscribe, smash it, elbow it, ear it, whatever it takes to make you subscribe to the podcast so you can be the first to know when we have new episodes. Please do that. And while you're at it, please leave us a 5-star review and a review to go along with it, because that's how we spread our word. That's how we get people to listen to the podcast and learn how they can become financially free through real estate investing. Matt, thank you so much again. I really appreciate it. And I want to thank everybody for taking the time out to listen today.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.